maybe, may not be, or if at all liability is not there, they will be getting the refund. So they are the people who are within the government's tax net frame itself, and therefore there is no reason for them to get the concession. That is what the perception is. Maybe wrong, may not be wrong, but let us not debate that. So this is my feeling that in all likelihood they will not exempt SEZ units because the purpose is ultimately to have some trail. So they may not ultimately do that. Goods covered by subsection 1, 1F or 1G are also not covered. Of course, under 1H, there cannot be double TCS. So goods covered, what are goods covered under subsection 1? We are aware, already prior to this amendment, there are so many things which are there in subsection 1. Specific goods are there. So, of course, this is now, expanding the scope to all goods. And subsection 1 has some specific goods. Say, for example, alcohol for human consumption, then tendu leaves, then, some other forest products, scrap, minerals, etc. These are some specified products under subsection 1 of section 206C. And therefore, also 1F is talking about the TCS to be collected on sale of motor vehicle. So that, I think that amendment came in somewhere in 2016, if I'm not wrong. So those things which are already covered by subsection 1 and subsection 1F or 1G. 1G is which we already seen now, the LRS and the overseas tour package. If you are selling any of those, then certainly you will not be required to collect under these provisions, but you will be required to collect under those respective provisions of subsection 1 or 1F or 1G as the case may be. And therefore here you don't need to again collect. That is about the excluded goods. No TDS, no TCS is of course again the same provision. If the buyer is liable to deduct TDS, then TCS will not be applicable. What is this? This is primarily, taking care of the situation where it is a works contract purchase. If there is a works contract, then yes, on works contract, I might be required to deduct TDS on that. As a buyer, I am deducting TDS on the works contract because the seller is supposed to be my contractor under 194C. Therefore, I am deducting TDS from the services which he is giving to me. And therefore, in such a situation, TCS will not be applicable. So either you go under TDS or under TCS. The trail is the only purpose. They want to have some trail. That is the whole idea behind this. Now, there are a few excluded buyers also. So who are those excluded buyers? Of course, central government, state government, etc. are excluded buyers. So if at all your client is supplying to a Ministry of Defense or Ministry of Railways, etc., or any of the state governments, then in such a situation, you are not required to collect TCS from the government. If your client is an importer, then also you are not required. This amendment has also come along with export at the stage of Finance Act. It was not at the bill stage, please bear in mind. But at the stage of Act, it has been incorporated. And we are told that if at all your client is an importer, then the TCS will not be applicable. Why? Because, say for example, if I am importing from China, then there is no mechanism in place for the government to go after the person, the businessman in China, and ensure that he follows all these TCS provisions which the government has incorporated in India. And therefore, that person is not required to register or collect this TCS from the goods which is selling to the local buyer, our Indian buyer. So therefore, import is out and export is also out. And of course, some persons to be notified. They are likely to notify some further list. If at all somebody is finding some difficulty and if able to bring out a case to the government that look here, these provisions are not very well for us. There are some genuine hardships which are concerning coming out of it. Then in such a situation, yes, probably the notification might help them. And one will have to go under the notification, get the notification to include those names, and then you will be out of the purview of the TCS. But subject to that, yes, you are covered. So this covers, entire all the goods. There is no exception now. As I said, subsection 1 is having specified goods, but now the scope of the section has been expanded to all goods, and the nature of goods, etc., is not important. Your client might be dealing in any of the goods, and he is covered. But only goods, not services. That is also one thing which one has to know. It is confined only to goods as of now and not services. Seller has been defined. So what is the meaning of a seller? Because in the earlier slide we have seen that TCS is to be collected by a seller of goods. So all seller of goods are supposed to collect TCS. But now please also understand that by definition, in the explanation they have said seller means a person whose total sales or gross receipts or turnover from the business carried on by him exceed 10 crore rupees. So all the small players are out. So if your client is not having turnover of more than 10 crore, then certainly he is not covered by these provisions. And in the year in which he crosses 10 crore, from next year onwards, he will be suffering this TCS. Till that time, he is not covered, right? So total sales, gross receipts or turnover from the business if exceeds 10 crore in the immediately preceding financial year in which the sale of goods is carried out. So sale of goods, say for example, you are making sales today. So please look at the earlier year's sales, whether if it is crossing 10 crore, the answer is yes, then yes, you are covered. And then all the provisions are applicable thereafter. But if the answer is less than 10 crore, then of course you are out of the purview of this TCS provision. Seller also can be notified by the government, like buyer can be notified, even sellers can be notified by the government, and one will have to be present for that. So that is about the seller, the meaning of the seller under 2061H. So let us summarize what we have gone through these provisions till now. So let us summarize the points one by one, so that it is easier for us to handle the issues which we are going to enter now. So TCS is to be collected at the time of receipt of such amount. This is the first and foremost principle. If at all one understands this concept, this provision, this particular point as a valid point and accepts this as a the thumb rule, then thereafter many of the issues get resolved according to me. Many issues revolve around this particular controversy. So let us first and foremost again re-emphasize that TCS is to be collected at the time of receipt of the amount. However, please also note that the computation is as a percentage of sales consideration. So here is the dichotomy. Though the collection is at the time of receipt, the computation has to be made as a percentage of sales consideration. Basic threshold of 50 lakhs is provided, and only on the excess amount you have to collect the TCS, not the entire amount. So if at all during the year you have collected 60 lakh rupees, then you have to the 10 lakh rupees will suffer TCS and not the entire 60 lakh rupees. Export and imports are out, as we have discussed. Government as a buyer is excluded. Please understand that government as a buyer, so Ministry of Defense, Ministry of Railways, etc., are excluded, but government companies as a seller are not excluded. So if at all your client is buying something from a government company, say ONGC or HPCL, BPCL or something, if your client is a buyer from these companies, then in such a situation, the government company will certainly collect TCS from your client, and you will be having to get this as a credit under TCS mechanism. It is applicable where sales turnover or gross receipt exceed 10 crore in the immediately preceding financial year. Lower collection of TCS is not possible under section 1H, subsection 1H. Why? Because we have already got one subsection 9 in this section 206C. That subsection provides that as far as subsection 1 is concerned, the products which are specified in subsection 1, so alcohol for human consumption, etc., all those places, the rates are prescribed in subsection 1, and it is further possible for a person to avail this lower collection certificate rather. It is possible for one to get that certificate and reduce his burden of TCS under the subsection 1. But subsection 9 has not been amended insofar as to include this subsection 1H. So as far as 1H is concerned, the rate is fixed at 0.1% and it cannot go below that. There cannot be any nil rate, there cannot be any reduced rate without any doubt. Of course, the argument is probably that 0.1 is something which is very, very nominal, and therefore there is no need for someone to go below that. There might be some reservations on our side at times 0.1% also. If my turnover is from very big amount, it might be a sizable amount and I might not be having taxable income, etc. But let us keep all those stories aside, right? Let us take it as a matter of fact that we are not going to get a lower collection certificate because the enabling provision of the subsection 9 has not been amended. If TDS is deducted by the buyer, then TCS does not apply. That is the whole sum and substance, right? Because the purpose is primarily to have a trail. Now, on trail, the purpose, it was advocated to be a trail. And in fact, immediately after the finance bill, there was a conference at Mumbai where the Honorable Finance Minister was present. The chamber asked this pertinent question that why this is required, this provision is required. And we were told, at least in the conference, that the purpose is to have a trail. With due respect, we have our reservations on this purpose, the purpose which is explained to us. If this was the purpose, probably then the amendment was not required at all. Because in any case, we have got a GST system in place, GST net is already there. And there are all the people who are already having turnover of more than 40 lakhs are registered or at least supposed to be registered under GST. And therefore, there was no specific purpose of having one more section under Income Tax Act just to have a trail. But somehow this is what the purpose which was being informed to us. Maybe one of the purpose, as far as the memorandum says, that it is with a view to collect more taxes, widen and deepening of the tax base. That is what the wordings have been used. Now, to my mind, that is also not correct, because this is not going to neither widen nor deepen the tax base. Because in any case, the person will have to get this as a refund whenever the money is ultimate. Whenever the person files return, he is going to get the set off of it, and will have either reduced tax liability or refund, as the case may be. So this is not going to certainly increase to the tax collection of the government. Maybe yes, it might be, for a temporary purpose, the cash flows will be improving of the government. But ultimately, the credit has to be given for this. So that purpose is also not, probably the correct purpose. So therefore, one really fails to understand what is the correct purpose of this provision. But anyway, this is there, and therefore we'll have to study this. Having dealt with all the provisions, let us now travel to the issues. And as I said in the beginning also, there are few issues which I have listed down for the purpose of our discussion. I am sure that there might be many more issues than what I have listed. And therefore, I am open to all the discussion and question answer session towards the end of this talk. We'll have a question answer session where, we'll try to understand further issues. And if at all I am able to reply to the best of my ability, I will try to reply to all the questions. With that, friends, let us go to the issues. So first and foremost issue which comes up, I think more or less now some of the issues are already known to all of us, because this provision is already in place for more than a month. And I think at many forums you might have read some articles, you might have also attended some webinars or some seminars where you have already understood this issue. So if at all there is a repetition of that, please bear with me. But for those people who are attending for the first time this session on TCS, this might be interesting. So first and foremost, whether TCS is required where the amount is received post 1st October, but the sales was made in the earlier segment, the earlier first half, question 1, or it was made in the earlier financial year also, what it is. So, are we saying that the sales which was made in the first half of the year, even for that I have to collect TCS? Or are we saying that the sales which I have made in the financial year 18-19, or even maybe even the year before, right, 17-18, 16-17, 14-15, whatever, even all for all those periods, do I have to collect TCS? That is the question. And the answer is, because as we have discussed earlier also, as a cardinal principle, that this is connected with receipt, and therefore one will have to accept the reality, whether one likes it or not, that even for the earlier sales, the sales made in the first half of the year, or even for the sales made in the prior years, you will have to collect TCS at the time of receipt of this money. So whenever you receive this money, you are having a debtors in your balance sheet, and whenever the debtors are making payment to you, in that particular period, you will have to collect TCS and pay for that, though the sale is pertaining to the earlier financial year, or maybe the first half of the financial year. At that time, the provisions of 190, this 206C was not there, and therefore, one might feel that why should I be suffering the TCS? But yes, you will still be required to collect. This is the language of the section which is coming out, and also circular has also clarified, circular number 17, which has been issued on 29th of September. They have in very clear terms, they have said that yes, it will be applicable for the old amount to be realized also. Now, on 29th of September, the government comes out with the circular. And on 30th of September, the very next day, they come out with a press release. The press release says that the purpose of the press release is to clarify some of the doubts which have emerged from the provisions and also from the circular. So within one day, they have realized that yes, there are some confusions which are occurring in the mind of the people. Now, you see, this is the way in which the government works. If this was so, then why it was not included on 29 September circular itself? Maybe because circulars are binding and press releases are not, or whatever. But then, they have come out with a press release on 30th of September, in which they have explained the purpose of this provision. So if at all, you have a question, okay, why you are making me to collect TCS on the old sales also? Then they are saying that, look here, basically, boss, we are trying to make your life simple. They are saying that it is because of the simplicity. It would have been very difficult otherwise for you to find out from your realization as to how much is pertaining to sales made after 1st October, and how much is pertaining to sales made prior to 1st October. And therefore, with a view to have a simplicity, we are bringing out this type of provision, that it will be applicable even in respect of the sales made earlier. Now, all of us will, without a limit, without 1 minute wasting of 1 minute, will not agree to this proposition, at least the purpose. We will not agree with the purpose. It is certainly very easy for me to find out that, what is the sales pertaining to the earlier period and what is the sales pertaining to the period post 1st October. And therefore, we will not buy that theory. Any of us will not buy that theory. But somehow, this is the purpose which has been explained to us. It's just something, just excuse giving, I would say. कुछ बोलना मतलब बोलना ऐसा है, but I would not agree with this. But anyway, that is how it is. The press release is saying that it is for the purpose of simplicity. So let us at least be happy that the government wants to make our life simple, if at all they are having that type of thinking. That takes me to the second issue, which is, if at all I am receiving amount up to, so this I'm talking about the threshold of 50 lakh rupees. So what it is, I have framed one example, say up to 30th of September, I have received 35 lakh rupees from one particular buyer. I am a seller and I am supposed to collect TCS from one particular buyer. I have collected up to 30th of September 35 lakh rupees, and from October to March now I collect 30 lakh rupees further. Now whether TCS is applicable. So do I say that, look here, your provision has come on 1st October 2020, and therefore from 1st October 2020 to 31st of March 2021, my collection from this particular buyer is only 30 lakh rupees, and therefore, sir, please excuse me, I don't need to collect TCS from this particular buyer. Do I have a valid point there? That is the question. And I would feel no, because this threshold is applicable vis-a-vis the 50 lakh rupees turnover for the year. Not turnover, I'm sorry, not turnover, the collection, the receipt. So this 50 lakh rupees is vis-a-vis receipt for the entire financial year and not for this second half of the year, October to March, because the threshold talks about rupees 50 lakh in a financial year, and therefore it will be in such a situation, yes, 35 plus 30, it is 65. Therefore, I'm crossing 50 lakh, and therefore 15 lakh rupees will suffer the burden of TCS without any doubt. Circular also clarifies that. Circular says that for the computation of threshold, receipts from April to September are to be included. However, TCS, the circular further says in the press release, the press release further says that the TCS will apply only on receipts post 1st October 2020. So what it is, let us change the example slightly. In our example, we have said 35 plus 30. If at all we change the example and we say that receipts up to September was 60 lakh rupees and receipts post September is 30 lakh rupees in our example, if we mention the same figure in the example. Now what will happen? See, 60 plus 30, as such it becomes 90, and therefore do I reduce 90 minus 50 and apply on 40 lakh rupees, or the receipts which are post 1st October are only 30 in our example, and therefore I apply on only 30? The answer is very simple. It will apply only on 30 lakh. Because why? Because up to 1st October 2020 there was no such provision. So therefore, though I have crossed the threshold of 50 lakh rupees prior to 30th of September, and in fact went ahead of the threshold by 10 lakh of rupees, even then the 10 lakh rupees which has already been collected, the excess amount of 10 lakh rupees which has been already collected in the first half of the year, will not suffer any TCS, but it will apply only in respect of the amount which I am collecting post 1st October. So in the change example, it will be only on 30 lakh rupees and not on 40 lakh rupees. So the excess amount of 10 lakh rupees is not to be counted again for the purpose of TCS. Of course, this issue is going to remain only for the current financial year, and next financial year onwards it will be again fresh 50 lakh rupees, and therefore our situation will this question will not come from the next financial year, because 50 lakh rupees will be the threshold, and we'll have to the provisions will be applicable right from 1st of April. Therefore, no difficulty there. That takes us to the $1 million question now. And here there are different views, completely contrary to each other. Different views, different practices have already started, and therefore all the confusion in the world is revolving around this particular question, whether TCS is to be charged in the sales invoice. People have said that we want to change our software. We need to entirely, our tax invoice format will change. We'll have to undergo that change. We'll have to have one customization of our tax invoice, etc. And all these issues are there. So first, my view as far as charging in sales invoice, I am absolutely clear and without any doubt, and no confusion is there at all in my mind, that TCS is not to be charged in sales invoice. Please mark it loud and clear. The TCS is not to be charged in the sales invoice at all. Now coming to practices. Now this is, this is because of the provision of the act, right? The provision of the act says that it is, as I said, the cardinal principle, it is connected with the receipt. It is not at all connected with the sales. It might be so happening that my turnover is 100 crore. So yes, I am a big SSE, no doubt. I might be selling to one particular buyer who is also buying from me in a year, say maybe 50 lakh rupees. Absolutely no doubt. But please understand that ultimately that person may not pay me within time. He may pay me after 3 months, 6 months, 8 months, 1 year, 2 year, we don't know, right? At times there is bad debts also. In business, bad debts is also there. So now what I'm doing, if I'm charging it is a part of a sales invoice, I am making an assumption that the person will make me the payment of more than 50 lakh rupees in this current financial year. Now, this is completely contrary to the provision. Absolutely not required. What you should do then, if not, then how to account for it? That is also one question. We can take it simultaneously. In my view, it should be accounted only by way of a debit note. So once the person crosses 50 lakh rupees of payment to you, once you have collected more than 50 lakh rupees from any particular customer, then from that date you start collecting on each and every receipt which you are making. You might make a monthly debit note, you might make a you might raise a debit note at the end of each month. At the end of each month, say for example, my collection from a person up to October is 31st October is, say for example, 49 lakh rupees, and in the next month he pays me 4 lakh rupees. So therefore now it is crossing 50 lakh and it goes up to 53. So on the 3 lakh rupees I raise a debit note on that person and collect at the rate of 0.1%, 0.075 of course in this year, uh, on the amount of 3 lakh rupees. So it is completely connected with sales, sorry, realization, and not at all with sales. And therefore, please don't charge it on sales. My humble submission, my humble request to all of you, and we are, some around 70 people attending here. My request is please stop this wrong practice. There are few people who have started this wrong practice, and our clients are asking us a question that look here, मेरे sales पे तो लग के आ जाता है sir. मैं जहाँ पे purchase कर रहा हूँ वहाँ से तो लग के आ जाता है. How you are saying that I should not charge? Now, my answer is this. We have all seen that on the cigarette box it is written that there is a statutory warning that smoking of cigarette is injurious to health. Now, despite of that, if somebody smokes the cigarette, does it mean a healthy habit? I would say absolutely no. Now, the somewhat similar is the situation here. It is very clear that the provisions apply on a receipt basis. Still, despite of that, if someone wants to collect on a sales invoice, then probably we are not in a position to convince them or explain them, but it is absolutely not required according to me. And just because there are few big players in the market who have started following a wrong practice, it doesn't become a valid practice. So wrong will remain wrong even if it is done by big players. Now, many of the clients, many of the clients are dealing with some of the very huge listed companies, and those companies have already started collecting the TCS on the sales invoice, and therefore our clients are also confused. I am saying very categorically, no requirement of charging on sales invoice. Please wait. Some of the clients might not cross, some of your customers might not cross 50 lakh rupees, and therefore you don't need to do that. What are the other issues? What are other difficulties if you start collecting on a sales invoice? Say for example, you start collecting on a sales invoice. Now your payment might come 6 months down the line, 8 months down the line, and in a worst scenario, it might not come also. But you are already preponing your TCS liability to current month, because once you are collecting from the person, probably you don't have any business, as part of a sales invoice. If you are collecting, then you don't have a business to keep it with you. You will have to deposit with the government, according to my understanding. There are people who are saying that no, sir, I will raise in the sales invoice, but I will make the payment to the government only when I get the realization. So somewhat similar to the service tax situation which the professionals were following, the less than 50 lakh rupees fees professionals, they were following this type of practice under service tax regime, that we were raising the bill, but at the same time the payment of service tax was connected to the date on which I realized the money from my client. Now, under service tax, there was a specific notification, a circular to that effect. Under income tax, there is no such notification or circular or mechanism in place, and therefore again you are wrong in saying that though I will charge in my sales invoice, I will make the payment only on realization. Also, the simplicity which the government was talking about, how would you address that? How would you again help yourself by calculating कि कौन से बिल का पैसा आया, कौन से का नहीं आया, वो कैसे आप ढूंढोगे? Suppose the realization, if you want to again come back to realization, then why charge on sales invoice only? So my humble submission is that it is not required, and you are preponing your tax liability unnecessary. Of course, it's a 0.1%, and for people are saying, sir, simple हो जाता है ना, काम आसान हो जाता है. Now, you see, आसान हो जाता है. If you want a easy life, yes, you can do that. But easy life vis-a-vis your liquidity is something which you have to decide. If at all you are going by that formula of charging an invoice, then 0.1 the little drops of this make a big ocean, as we know. So, ultimately it might be so that, 0.1% may not be looking that big, but when you accumulate, it might turn out to be a big figure on a month-to-month basis, and your liquidity is in difficulty. So I would feel not required, but still, if anybody wants to do that, then I think I would park it there and leave it to his wisdom there. Then let us take the question whether TCS is to be collected on the GST portion. So I'm selling the goods. I'm also charging GST on that. Whether do I need to collect TCS on the GST portion also? The circular, of course, says that GST is a part of turnover, and therefore, for the purpose of TCS, it should be collected on GST also. Though for the purpose of simplicity and for the purpose of ease of not maintaining all this detailed record, etc., I might agree with that. But as a concept, I don't agree that GST is a part of turnover. GST is a statutory levy, is not a part of a turnover. And I am told that the amount of TCS is on the amount received as a sale consideration. The TCS will suffer on the amount of sale consideration. Here, I am not in agreement with the circular that it is a part of the sales consideration. GST is not a sales consideration for sure. It is a statutory levy. And therefore, I would feel, legally speaking, very correctly speaking, it is not required. Having said that, now coming to the practical difficulties, if at all, if I want to, bifurcate say the amount which I'm receiving from my customer, if I want to bifurcate between the net amount and GST amount, it might be again a Herculean task for me to, find out the GST and remove it out from the purview of this TCS. And therefore, in that context, I'm saying for the purpose of our simplification, one might forget that legal position and adopt a practical view that yes, okay, let me collect on the entire amount without breaking my head on the breakup of it. It might be really difficult at times because if your GST is having, if you are dealing with one particular client and you are supplying various items to him, right? In that particular various items are having different rates of GST. One invoice might be having 2 or 3 rates of GST, and you might be getting a consolidated payment in respect of 3 invoice, 5 invoice, 10 invoice at time, or you might be getting a lump sum payment of round figure 10 lakh rupees de diya, 15 lakh de diya, aisa. In such a situation, it will be a very difficult task for you to apportion between GST and the goods, the payment received for goods and payment received towards GST. And therefore, with a view to have a practical view, I would suggest you can go for that type of a situation. But of course, legally, I am sure that the circular is incorrect, and our proposition that it is not part of turnover is a correct proposition. In a given case, if the assessee is in a position to maintain that type of records and find out, then yes, I am for sure that this can be successfully argued before the courts in respect of this particular position. I'm sorry. So that is about the TCS on GST. Also the converse. Let us take the converse. Whether GST is to be levied on TCS. Now this will come up only in a case where the person doesn't want to. My proposition is not accepted to him, and he goes for the collection of TCS on sales invoice. Though I'm saying it is not a healthy practice, but if at all the person wants to follow that for whatever good reason which he is having in his mind. So if he follows that and he starts levying TCS as a part of a sales invoice, then what happens in that situation? Does he has to collect GST also on the TCS? So what comes first, TCS or GST? Or the chicken and egg situation, what comes first, GST or TCS? That is the question. Now here we are aware of the severity circular in relation to TDS, which says that no TDS is applicable in respect of the various GST included in various payments. So that is as far as the TDS provisions are concerned. As far as TCS is concerned, of course, there is no clarification. But let us refer to a circular of CBIC. This is circular number 76 of 50. It is not a CBDT circular. It is a CBIC circular. CBIC circular dated 31st of December 2018. Initially, they said that taxable value for the purpose of GST is inclusive of TCS. Now, of course, this circular was in context of the items prescribed in subsection 1, because this is 31st December 18. That time 1H was not there. They were talking about subsection 1, but broadly the logic, the concept remains same, and therefore we can safely have a recourse to this circular. They said that taxable value for the purpose of GST is inclusive of TCS, and therefore GST is also to be levied on the TCS. That is what the CBIC opined on 31st of December 2018 by way of this circular. However, post issue of this circular, there was a discussion between two boards, the CBIC and CBDT, and both have come to a mutual agreement they said in consultation with CBDT, thereafter they issued one corrigendum on 7th of March 2019, by which corrigendum they said that the matter has been reconsidered in consultation with CBDT, and now they are saying that TCS is not a tax on goods, but it is an interim levy, and therefore there is no need to collect GST on the TCS portion. So I think this was, though this was under subsection 1, this also addresses our issue, and therefore if at all we are following that practice, even then, as far as GST is concerned, GST is not to be levied on TCS. That is what my firm view is. Of course, my knowledge of GST is only a working knowledge, and I'm really not an expert on GST. So there might be many experts in GST. Some of them might be our study circle members also. So they might educate me if at all my view is getting wrong here. So during the course of our question answer, you might please educate me if at all you feel that my view is wrong. And please refer to these two, the circular as well as the corrigendum, which CBIC has given. With that, friends, let us take one more issue. The next issue is that, what if there is no sales in the current year? If there is no sale, and I am following the CBDT circular, and I am saying that okay, because of the provisions of the section as well as the CBDT circular, I have to collect even in respect of the money which I received for the earlier year sales. Now, do I need to my question is different. My question is that can the assessee be said to be a seller here? In this year, I am not a seller. In the earlier year, I was a seller, yes, and therefore I am now collecting. My question is, which year's turnover is to be checked now? Because the definition of seller says the turnover of more than 10 crore in the year immediately preceding the year in which the sale was made. So I think the question is slightly tricky. But my question is this: say for example, in the assessment year 2021, the financial year 2021, I am collecting this money for the sales which were made in the financial year 18-19 after one and a half year. Now, do I need to go and check the turnover of the financial year 17-18, that whether I have crossed 10 crore at that time, or do I need to go and check financial year 19-20 to find out whether I have crossed the threshold of 10 crore? That is the question. If you go strictly to this provisions, the seller definition, I will just take you to the earlier slide, right? It says total sales, gross receipts or turnover from the business carried on by him exceed 10 crore rupees during the financial year immediately preceding the financial year in which sale of goods is carried out. So in our example, sale of goods is carried out in the financial year 18-19, and therefore do I go and look at the turnover of 17-18, or do I go and look at the turnover of 19-20? That is the question. I would feel ideally, technically speaking, legally speaking, you need to go to the turnover of 17-18, and if that is less than 10 crore, then probably you are not required to collect TCS, because the wording of the seller, the explanation, the definition of seller has been defined in such a fashion. But this being ultimately, a provision of TCS and TDS, where ultimately the other person is going to get credit and etc., probably it will not be worth for you to litigate on all these things. Let us not do the hair split exercise, and let us be more pragmatic and practical, and let us try to make the payment and collect the TCS so that the person also gets the credit and matter ends there. But of course, push to wall, probably you can rely on these decisions, rely on this interpretation, and maybe you can try to save your client from some difficulties. Otherwise, if you want to just plan on that, I think probably it is not required, right? So let us be realistic in life. With that, let us go to the next issue. So in the year of no sales, of course, this is not an issue, rather it's a comment which I am putting before you, that in the year of no sales, now, if I am not having any sales in the current year, now I might be having some difficulty, because there can be inquiry from my AO. He will say that, look here, in this you collected TCS from so and so person, but ultimately there is no sales in the current year, and therefore probably you have unrecorded, you have done some under recording of sales, etc. Unrecorded sales are there. That question might come up. Even my buyer might have some difficulty, that for you it is the first proposition will be that it will be an unrecorded purchase in your case, because though the TCS has been collected, your GST details which you are giving to us is not matching with this, and therefore this type of issues are likely to come up. Of course, we will be able to surely be able to put up the reply saying that, look here, this is in respect of the earlier year sales, etc., and all those things should be very easy. But now we are entering the era of faceless assessment, faceless appeals, etc. So all these things will be very, it will slightly one more challenge, that you will have to maintain proper records, explain the things properly in writing. That will be a challenge. So be ready for all those questions. Of course, answer is not absolutely difficult. It is elementary, very much elementary. But one will have to face the music if at all the other person does not understand what you want to convey, because now in faceless assessment and all this, yeah, probably that is going to be one more challenge. But anyway, let us park it there. So that is how it is. Let us then go to the issue which is in respect of advance. So what happens if I am receiving advance in respect of a future sales? Whether I have to collect TCS now today, or do I need to collect the TCS at the stage when the sales is finally taking place? So what is the view that we have to see? Right? So the CBDT of course says in the circular number 17 that on advance also you collect. On the very first point you collect TCS and pay it off and finish off. That is what the CBDT view is. But my humble submission is that it is again incorrect. Here is a place where CBDT has gone overboard. It has gone in a wrong direction completely. It is saying that the advances are part of receipt and therefore TCS will be applicable. I would not agree, because the section says that the TCS is applicable on the amount received as a consideration for sale of any goods. Now, whatever amount which I am receiving today, whether it is consideration for sale of any goods, the answer is a big and clear no. It is not for sale of any goods. It is for a future goods. If you look at sale of goods X, section 4, subsection 3, it says that the property in goods transferred on delivery. So therefore, unless and until I hand over the goods have not, the sale has not taken place, and therefore the sale is not there. Therefore, this is not a consideration for sale of any goods. How do you address this then? I would feel that the advance you should park it in a separate ledger account for ease of our accounting also. Advance received from so and so party, and whenever the sales take place, at that time you, by way of JV, you adjust that and you offer that amount for TCS. You collect TCS at that stage, if at all applicable, if at all the 50 lakh threshold etc. is crossed. But somehow CBDT has taken a wrong view, and they are saying that it will be applicable on the advance also. They have probably not anticipated a situation where the advance many a times ultimately the sale may not take place at all. It is very much possible that I have taken advance, but ultimately the goods which I have manufactured is not up to the mark, up to the requirement of the buyer. The quality is not good. The time within which the buyer wants is not up to the. I have not been able to cater the buyer within that particular time frame, and for various other commercial reasons, there is a advance return back. It is possible. So in such a situation, what will happen to the TCS? That nobody is replying, and therefore I would feel that CBDT circular here is absolutely wrong. But legally we are definitely justified in taking a view that on advance TCS is not applicable. But if somebody wants to play safe and doesn't want to enter litigative areas, then yes, circular says on advance you collect. So that is as regards advance. What about sales return? Now sales return again is the question. Now say for example, I have made a sales today, I get the money also in some time, and thereafter there is a sales return, then there is a problem. If the money is not received, say for example, I am making a sale on today on 19th of November, I am getting the money for that on 25th of November, and on 15th of December, the person comes and says that no, your goods are not up to the mark, please take it back. Now in such a situation, whether you will be able to reduce the amount of sales return while making payment of the December TCS, I would feel no, it will be very difficult, because circular also says it is not allowed, that sales return is not adjustable. That is what they are saying. Of course, in a given situation where the money is not received at all and the goods are returned back before payment of money, the question may not probably arise, because in such a situation, the TCS being connected to the receipts, as we have understood, it will not be having any major issue. But in a case where the monies are received and thereafter there is a goods return, then probably you will not be able to take a concession out of that sales return. Ideally, it should have been given, but somehow it is not there, and circular also says that it will not be there. So maybe because it is connected with receipt, probably CBDT here may be justified in taking a view that yes, it will be not available to you. Similar is the situation with discounts and incentives. If all discounts are given as a part of the sales invoice only, then yes, the amount which you will receive will be lesser only, and therefore no big deal, no surprises, no question. It will be very much simple for you to understand that it will be connected with receipt, and therefore no difficulty. But if at all there are some incentives which are connected with your volume, which will be given at the end of the year, etc., can you take rebate for those incentives which you give it to your customers? The answer is again no, you will not be able to do that, and because it is connected with receipts. So though in reality you might be giving some sort of incentives, as and when in future you receive lesser amounts, so yes, in indirect manner you will be getting it, but not in a direct manner. So in a way in which in the month in which you pass on those incentives, pass on those JVs in your books of accounts for incentives, you will not be able to reduce that from your TCS collection liability. Let us take another example, another issue about the threshold of 10 crore. So whether for deciding that amount of 10 crore for the earlier financial year, Do I need to include GST or do I need to exclude GST? What should I do? That is the question. Here, my view is that, if at all you are following an inclusive method of accounting, then the GST is already included in that, and you will not be justified in separating it out again. Because though you are once you are following an inclusive method, for all practical purpose you have to follow that inclusive method only. But normally people are following exclusive method, and exclusive method is of course a valid method. I am aware about section 145A, I am aware about ICDS, etc. But those are having a specific application. When it comes to this application of section 206C1H, if at all you are following exclusive method of accounting and your profit and loss account is already credited by sale, the sales without GST, then in such a situation you don't need to add again. Therefore, my view is that follow the method which you have been following for the purpose of preparation of your financial statements, and don't no need to either add separately or remove it from the amount of your turnover. That is my view on this subject. Then the next question is, assessee is engaged in goods and services both. I am a dealer who is selling machineries. I am also doing installation of those machineries at my client's place. Now, whether this receipts from services is to be considered for deciding turnover. So, for the purpose of deciding 10 crore rupees, say in the earlier year, my sale of goods is say 9.5 crore, and my services, the installation charges are say 1 crore. So, do I say that I have crossed the threshold of 10 crore and therefore TCS is applicable to me? That is the question, right? As far as and the other question thereafter is that for the current year's service receipts, whether do I need to include this both, or do I have to focus only on the amount which I receive for sale of goods? Those are the two questions which we are addressing now. I would feel, as far as earlier year's turnover is concerned, the turnover will include the receipt also. The receipts for the purpose of services also will be included, because the wordings are sales, turnover, or gross receipts. Now, gross receipts is a very large, wide word, which will also include this service charges for installation, etc. And therefore, for the purpose of deciding that threshold of 10 crore, the turnover has to be seen, gross receipt turnover, in a consolidated manner. So, I will have to say that yes, in the example which we have taken, it is 10.5 crore, and therefore I am liable for TCS collection certainly. But when you come to the current year's question, and when you say that my service receipts are from a same party and the goods are also sold to the same party, do I need to include on service receipts also? To my mind, if you are able to have a separate ledger account, if you are able to identify that, look here, this item, this payment which I have received is towards services, and this payment which I have received is towards goods, then yes, certainly you will be justified, very much justified in taking a view that on services part it will not be applicable. It will be applicable only vis-a-vis the goods, which the receipt in respect of the goods. I think absolutely possible for you to maintain separate ledger account and park the services in a separate ledger account. Absolutely possible, and in that situation you will be able to reduce the TCS burden on the services part. But if no, it's a consolidated payment, lump sum payment, etc., then probably it is all those things may not be worth doing it, and therefore in such a situation, yes, you will be making collection on the entire amount. It's a personal call, it's a practical call which one has to take if is able to maintain that type of records. That is what my submission is. Next is that in the earlier year, my turnover of goods was 9.5 crore, and I had an interest income of 60 lakh rupees. So if I add my interest income of 60 lakh rupees, I am crossing 10.10. So do I need to undergo the TCS provisions, or my turnover is 9.5 crore, and therefore I am not required? That is the question. Here also again the answer will depend on the fact as to whether this amount of 60 lakh rupees of interest is assessed as your business income or is assessed as your income from other sources. What have you been offering this amount for all the period of years? If at all this has been assessed as a business income only in all the earlier years, then yes, certainly the amount gross receipts is much, much wider to take interest also within its ambit. And therefore, yes, in such a situation, your turnover is 10.10 crore and not 9.50 crore. But if at all the interest income is assessed as income from other sources, then certainly your turnover is 9.5 crore and not 10 crore, and therefore you will not be required to undergo the TCS provisions. Let us take some specific examples now, whether TCS applies to sale of immobile properties. Now, as far as immobile properties are concerned, so the question is whether the builder developer will collect TCS on the sale of properties when he makes the next sale to his buyer. The answer to this is absolutely clear, and without any doubt, everybody probably agrees on this. But it will certainly not be part of TCS. This subsection 1H will not be applicable to that for various reasons. First and foremost, let us go to our section only, right? Subsection 1H talks about TCS on sale of goods. Now, immovable properties are not goods as we understand in a common parlance. It is not a goods, because when you refer to the Sale of Goods Act also, goods have been defined to include various things, but not immovable properties. Goods are always movable properties, and therefore immovable properties are certainly out. Also, under TDS provisions, if the transaction is more than 50 lakh, probably the TDS will be applicable on that sale, because under 194 IA you might be deducting TDS on that, and therefore also it will go out. But I'm saying dehors that 194 IA, even if the property is for less than 50 lakh rupees and TDS provisions are not applicable, even then, as far as TCS is concerned, certainly it will not be covered, because immobile properties is not goods, definitely. For this proposition, you can also refer to Sale of Goods Act, which defines the term goods. Therefore, certainly it will be out of the purview of TCS. Whether TCS applies on shares and securities, because now, if at all, when we are saying that, when we are referring to Sale of Goods Act, we also come across the situation that shares and securities have been defined to be goods under the Sale of Goods Act. Now, therefore, the question comes up on a shares transaction. Does this TCS provision apply? Fortunately, the circular number 17 has clarified that it will not be applicable in a case where the securities or even commodities, they have also taken commodities transactions, right? Commodities are traded through a recognized stock exchange or are cleared through a recognized clearing corporation. So if at all your transactions are on a stock exchange, recognized stock exchange, or if at all the clearance is through a recognized clearing corporation, then the circular gives the relaxation that in such a situation, TCS will not be applicable. It will not be applicable in respect of sale of electricity also. So electricity is otherwise goods, but the circular says that it will not be applicable for sale of electricity, renewable energy certificate or energy saving certificate, etc. if they are done through registered power exchange. So if there is a registered power exchange in which various people dealing with electricity, various electricity companies are registered on that power exchange, and they are transmitting the electricity to each other, and they are selling electricity to each other, then in such a situation, Adani buying from Tata Power at a recognized registered power exchange will not be subjected to TCS. But as far as we are concerned, we buy from Tata Power or Adani Electricity. Yes, certainly that will not be through registered power exchange, and therefore we might suffer if we are crossing that threshold of 50 lakh. Of course, we cross that threshold of 50 lakh rupees. Coming back to the shares and securities, we have said that yes, on stock exchange, if it is there, then it will not be covered. So the question is, in that situation, whether off-market transactions and both the parties are buyers and sellers, are dealers in shares, whether in such a situation it will be covered. Yes, I would feel it will be subject to TCS if it is off-market transaction, and both the parties are not both the parties, rather the seller is a dealer in share. I, as a buyer, might be an investor in shares, but the seller, if he is a dealer in shares, then in such a situation, I feel that because the relaxation has been given by the circular only vis-a-vis the transactions to stock exchange, etc. As far as off-market transactions are concerned, it will be subjected to TCS. That is what my view is, because ultimately they are all part of the goods. They are goods as defined in Sale of Goods Act. Of course, one can also take a beneficial recourse to GST Act. Under GST, there is no GST levied on shares. But then I think the appropriate act is probably Sale of Goods Act rather than the GST Act. So under Sale of Goods Act, they are goods, and therefore probably yes, it is applicable. Just one second. Yeah. Uh, the next question is again, old-time favorite question, or old debate, which is always there, whether software is a goods or a service. So if we take a view that goods software is a goods, then yes, TCS will certainly be applicable. But if we take a view that no, goods is the software is a service, then in such a situation, TCS will not be applicable, because TCS is applicable on the goods, as we have understood. Now, in this context, you may refer to one very famous decision of the Supreme Court in Tata Consultancy Service versus State of Andhra Pradesh. In this decision, the Supreme Court has said that if it is a off-the-shelf software, then it is a goods. So it is just a tailor. It's just a software for all. Say for example, Tele without any alteration, etc., is a goods, is not a service. But if it is a customized software designed according to your needs and requirements, then yes, it becomes a services. That is what the broad message from the decision is there. So if at all it is a customized software, then it becomes a service. But if at all it is a off-the-shelf software, then it remains a goods, and therefore in that decision, the state of Andhra Pradesh was permitted to levy TCS on that, the VAT on that particular product. But when it comes to our income tax, we have to understand that if it is goods, then TCS will be applicable. We also need to examine applicability of section 194J. So if at all we take a view that it is a service, then yes, fees for technical services will come into picture. 194J will come into picture, and therefore it will be subjected to TDS under 194J. And so in such a situation, TCS will be ruled out, because we are aware that when TDS applies, TCS does not apply. That is the principle which we have seen earlier also. Of course, 195 situation is out, because 195 will be where a case will be a case where the software is provided as a service by an overseas party, and if he's not having, if it's a sort of an export, is an import rather, then in such a situation there will be no implication, because imports are also out, and therefore 195 is out of context. Whether TCS is applicable where the assessee sells his furniture. Now, let us look at the situation where I am a dealer in whatever XYZ item. I am a dealer in chemicals, say for example, but I am a manufacturer of chemical and I have got few machinery or furniture in my factory. Now I am disposing of that for more than 50 lakh rupees to one particular buyer. Now, whether TCS is applicable in such a sales, the answer is absolutely clearly no, because TCS is applicable vis-a-vis sale of goods. Now, as far as I am concerned, I am not a dealer in that particular item, a furniture or a machinery, and therefore, in my case, TCS will not be applicable on the machinery for sure. Of course, if at all, the next question is that purpose of goods. So now, if at all you have to look at it from the perspective of the seller, not from the perspective of the buyer. Say I am a manufacturer of a machinery. I am selling the machinery, and the buyer of that machinery is going to use that machinery as a capital asset, as an asset for the purpose of manufacturing of his own products. Now, whether in such a situation can I say that no, this is a transfer of a capital asset and therefore it will not be subject to TCS? The answer again here is no. In such a situation, in the change example, you have to look at it from the perspective of the seller. If the seller is a dealer in furniture and he sells furniture worth 1 crore rupees to someone, then certainly he will collect. And whether it is a capital asset or a personal use, it might be a jewelry situation. If a jeweler is selling the jewelry to some particular party of more than 50 lakh rupees and collecting 50 lakh rupees, then also, though it may be a personal use for a family use, but certainly he will be required to collect TCS on the product which he is selling. When the buyer, now let us come to the credit mechanism. When the buyer will claim the credit for TCS, that is the question, right? We have got section 199 in relation to TDS, which says that the TDS credit will be available in the year in which the income is offered. Of course, there was no mechanism rather in respect of TCS. But now, along with this amendment in the Income Tax Act from 1st October 2020, there is an amendment in Rule 37I also of the Income Tax Rules. One sub-rule 2A has been inserted, and which says that you will be getting the credit or in respect of TCS in the year of payment to your party, payment to your client, payment to your supplier. So if you are making payment to your supplier in that month, that year you will be getting the credit of this. Now this also brings us for one more support, that the credit mechanism is linked to the payment, and therefore unless and until you make the payment to the supplier, you are not having any position to claim this TCS as a credit in your against your income tax liability. So therefore, this brings one more support to our argument that it is to be connected with receipts and not connected with sales. So one more support here. Of course, what will happen now? Having said that, there are questions which are asked that my supplier is charging an invoice, and if I follow your method, the method which you are suggesting to charge it by way of a debit note, then where do I stand? The answer is this: that in respect of the TCS which is collected from your sales, you will certainly be getting the credit, but only if you made the payment. Please refer to this Rule 37I. So if at all you made the payment to your supplier during this financial year, then yes, you will be getting the credit for that. But if at all your payment is deferred to the next financial year, then Rule 37I will permit you to claim the TCS credit, though it will be appearing in your 26As for the financial year 2021. You will be getting the credit of that in financial year 21-22 whenever you are making the payment to that supplier. So without making payment to the supplier, you will not be eligible to get the credit. And just like in our TDS, the 26AS, we are getting TDS carried forward. Similar situation will be there for TCS also. It will be carried forward from year financial year 1 to financial year 2, or maybe 3 or 4 whenever you make the payment. So that is how the things will work. As regards your liability, yes, whenever you collect, you raise a debit note. In the next month, you will have to make the payment just on similar lines of TDS. So by 7th of month, next month, you make the payment, and after the end of the quarter, you file a quarterly TCS return on similar lines with TDS. So far as regards the credit in respect of TCS. Buying and selling from same person. Now, some example, if at all I am buying from one person, I'm also making payment, selling to the same person. Can I set it off both the balances instead of making payment by way of money? And can I say that therefore TCS should not applicable? Legally speaking, yes, because it is talking about amount received as a sale consideration. I would feel that it will be too adventurous and too wrong thing to do as a planning, because ultimately this will defeat the purpose of the entire provision, and therefore this becomes slightly academic according to me. Therefore, not much to be debated upon. Certainly not to be thought of as a planning tool. That brings us to one more issue: seller not collecting TCS. Yes. See, under TDS we are having one provision whereby we are aware that if at all the person who is liable to deduct TDS, the deductor of TDS as we normally call, has not deducted the TDS, but the recipient of the money has ultimately made the payment of taxes while filing his return of income, then the deductor is no more treated as an assessee in default. He is treated as assessee in default only till the time till which the the recipient doesn't pay his tax. Once he files his return and once he pays his tax, from that the seller is no more treated as the deductor is no more treated as an assessee in default, and interest also can be levied only to that date as per the decision of the Supreme Court in Hindustan Coca-Cola. We are aware of that very well. Right now, unfortunately, under TCS, such provision is not there. There is subsection 6A under provision to subsection 6A, which takes out the people to not to be treated as assessee in default vis-a-vis subsection 1. But this provision has not been amended, and therefore vis-a-vis subsection 1H, the new subsection, it is not provided, and therefore we are running a very, very high risk that even if the ultimately say, the buyer has discharges liability, even then we can still be treated as an assessee in default vis-a-vis the TCS also, and the interest liability and everything continues. Of course, I believe that this will require some representation, and we have noted this point also. Probably, ideally, this should come in line with the TDS provision, and therefore, the amendment should come in respect of this. I'm hopeful on that. But unless and until that amendment comes, we should accept that I will be still be treated as a assessee in default for a continuous period. So therefore, huge liability and a continuous liability. So be very, very careful if you are not depositing the TCS, right, or not collecting the TCS. So some point which you should bear in mind. Yeah. That brings us to some overlapping situation between 1F and 1H. 1F, as I said, was a section in respect of TCS on sale of motor vehicle, and 1H is other goods, the normal other goods, all other goods. So now ideally 1F is sufficient to take care of motor vehicle. There should not have been a situation where 1H and 1F should have been confused. But somehow, while deciding this, giving this circular in respect of subsection 1H, the CBDT probably traveled beyond the boundaries and also discussed about 1F. And some of the discussion is really, really not in good spirit. What they've discussed is this: they're saying that there is an overlapping between 1F and 1H. So, yes, if it is a sale of motor vehicle, it can go under 1F also and 1H also. So if at all we buy a goods from, we as a consumer buy goods from Navneet Motor, if I buy a car from Navneet Motor, then they say 1F will be applicable. But if the car manufacturer sells the goods to Navneet Motor, then this is a B2B transaction, not B2C transaction. In that situation, they say that 1F, if not applicable, then 1H is certainly applicable. Right? So they say subsection 1F is applicable for sales to consumers. In our example, I buying car from Navneet Motors, right? But subsection 1H is applicable in respect of receipts from debtors. Of course, there it is in connection with sale, and here it is again receipt. So again, there is some difficulty, but then they have said this. They say that TCS under subsection 1H is applicable if 1F is not applicable. So if at all, while Navneet Motor buys products from, buys goods, buys many cars from the Maruti, then in that situation, it will be applicable. That is what they are saying. In case of sale of consumer for motor vehicle, each less than 10 lakh rupees, right? The 1F is having the limit of 10 lakh rupees, but total receipt is more than 50 lakh. TCS under 1H is applicable. That is what they are saying. So, say for example, sales to consumer also. Even for consumers, they have said thereafter in the CBDT circular, they say that if there is one consumer, if there is one company which is buying, say for example, 6 cars from any of the dealers, the car dealer, and each car is having a value of 9 lakh rupees, right? So it is 9 into 6, as such becoming 54. If you go by 1F, the amount was 10 lakh rupees, the threshold was 10 lakh rupees, and therefore it would not have applied. 1F will not apply certainly, because for each car there is a threshold of 10 lakh rupees. In our example, it is 9 into 6. But if one company is buying 6 cars of 9 lakh rupees, 54 lakh, then they said that yes, when the company makes the payment, then TCS will have to be collected under 1H, if not under 1F. This is the confusion which they have created. Of course, it is not provided under 1F, but now by virtue of 1H, they are saying that it will be covered. So for sale of consumers, subsection 1H will not apply if it is covered by 1F. 1H will not apply if it is covered by 1F. So if all the transactions are more than 10 lakh rupees, then it will not apply. But if if all the car value is more than 10 lakh rupees, then it will be under 1F and not under 1H. This is the confusion which they have created. According to me, it is completely incorrect part on the part of the CBT, because section 1H talks about the goods which are covered by 1F, not the transactions under 1F. So I might be having a situation where under 1F, because of the threshold of 1F, it is going below 10 lakh rupees and therefore not applicable. But still the goods is covered by subsection 1F, and therefore as per strictly reading subsection 1H, this is not correct way of interpretation. But somehow CBDT has done that, and therefore maybe some litigation is envisaged here. Let us try to summarize the final things, the whatever we have understood so far by way of some examples. So applicability in various situations. In the first two columns, I am saying up to 1st October 2020 and after 1st October 2020, what is sales, what are receipts in this these two periods, and what is the amount subjected. The first one is 15 lakh rupees in the first 6 months and 45 lakh rupees in the second 6 months. So 45 plus 15, it is what 55. But my sales, so that is a sale, sorry. So sale is 55 lakh rupees, but my receipts are 10 and 39, so 49. So no price for guessing that. It is not crossing 50 lakh rupees, so TCS will be not applicable, nil in the example. The second example is 60 plus 30, right? So total sales is 90 lakh. I received 55 and 35, right? This is the similar example which we have taken, but because though it is 90, but I am receiving only 35 lakh rupees post this 1st October 2020. Therefore, on the 35 lakh rupees, so receipt is greater than 50 lakh, but applicable only on amount from 1st October. The amount which has already been received prior to 1st October has not to be again included for the purpose of deciding the amount of applicability of TCS. So it will be applicable only on this 35 lakh rupees which I am receiving post 1st October, and not on the 55 plus 30, not on that amount. Then 60 lakh and 30 lakh, my sales is 60, my the second half sale is 30 lakh. In the first half, I have received 85 lakh rupees, including some advance. So 25 lakh rupees is advance. In the second half, I am receiving only 10,000 rupees, friends. Even on this 10,000 rupees, this TCS will be applicable. Why? Because already I have crossed the threshold of 50 lakh rupees in the earlier first half, right? Earlier first half, I have received already 85 lakh rupees, and therefore advance will also take color of this sales now, and therefore on this 10,000 rupees, this TCS will be applicable in the second half. Whenever, even if it was 100 rupees, on the 100 rupees TCS needs to be collected, because the threshold has already been crossed. First half 64 lakh rupees sale, second half there is no sale. In first half I am receiving 10 lakh rupees, and in the second half I am receiving 54 lakh rupees. So totally I am receiving 64 lakh rupees, and in the second half I am receiving 54. So 64 minus 50, which will be 14 lakh rupees, which is of course lesser than 54 lakh rupees which I have collected in the second half, and therefore on 14 lakh rupees will be applicable. No sales is made post 1st October 2020. Please understand, the example is taken only for the purpose of explaining that post 1st October 2020, if you see, there is nil sale, but that becomes absolutely irrelevant, and you will be getting this TCS applicability on 14 lakh rupees. You don't have to look at the sales at all. You have to look at the receipt only, and therefore 40 lakh will be the answer on which the TCS will be applicable. The next example, 30 sale is 30 and 55. In the first half, I have not received anything, and on the second half, I am receiving 35 lakh. Right now, here again, this is with the purpose to explain that the receipt is less than 50 lakh, and therefore nothing will be subjected to TCS. You don't need to look at here and say that though the turnover is more than 55 lakh rupees in the second half, since you have not received more than 50 lakh rupees in the entire year, nothing is subject to TCS, because you don't have to look at the sales. Again, I'm saying you have to look at the receipts. So though in the second half your turnover is also more than 55 lakh rupees and the total sales for the entire year is in fact 85 lakh rupees, you don't need to look at the sales, you have to look at the receipt only, and therefore this becomes irrelevant that your turnover is crossing 50 lakh rupees in the second half. Extreme example, nil. There is no sale, no sale. Of course, in the second first half also there was no sale. And in the month of March 2021, I am receiving 55 lakh rupees advance as a advance for the purpose of the sales to be made in future. Now, according to my view, it is nil, because this amount is not in the nature of consideration for the sale of goods, and therefore nothing should apply according to me. But the CBDT view is saying that it will be applicable on the 17 lakh rupees, sorry, on 5 lakh rupees, as per the circular number 17, it will be applicable on 5 lakh rupees. That is what CBDT says. According to me, nothing in this year, but whenever in future, in the subsequent financial year, when you make the sale, this 55 lakh rupees will, the advance of 55 lakh rupees will change its color and it will become a consideration for sale of goods, and therefore it will be applicable in the subsequent financial year. That is what my view is. Of course, to that extent, the view of CBDT is different, and in my view, CBDT's circular is incorrect to that extent, but let us not debate much on that. That brings me to the second part of the discussion on TDS. I think we are already at 5:48. I will try to wrap up in next 15-20 minutes, so that 15 minutes. May I request Dilip Bhai or Parag Bhai to confirm that I can continue?
Yes, please finish your speech, because we have started late because of unavoidable circumstances.
Yeah, and how much time, Dilip Bhai, we are putting for question answer?
Around 10. How many questions have we received?
I need to check that, actually. I'm not seeing that.
Allow.
There is in the chat box as of now, there is only one.
Okay. Then around 5 to 10 minutes.
And a few other questions have come, 3-4 questions in the chat box and Q&A.
Okay. So around 10-15 minutes.
Around 10-15 minutes.
Yeah, it will be fine.
But yes. I request you to complete your presentation.
Sure, sir. Sure.
Thank you.
Thank you so much. Right, friends. So let us go to the TDS provisions, and some of the TDS provisions which I feel which we should discuss is this. First and foremost, I am talking about section 194N of the Income Tax Act. Now, what is 194N and why it is discussed here is this. When we see the finance bill, there was no amendment in section 194N. The amendment has come only in the Finance Act. So it was a surprise for all of us when the bill was converted into Act, and we have got Income Tax Act in our hand. At that time, this amendment has been made in section 194N. Before the amendment, let us look at the provision which was there prior to the amendment. What is 194N? 194N says that, prior to the amendment, it was saying that the banks or cooperative banks, banking companies or cooperative bank or post offices will deduct TDS from my amount of TDS from me from the amount of withdrawals if I make withdrawal of more than 1 crore rupees in a financial year. With a view to have a less cash economy, this was the target, that once a person withdraws more than 1 crore rupees from his bank account, he will suffer the TDS at the rate of 2% on the sum exceeding 1 crore rupees. So say for example, I withdraw 1 crore and 5 lakh rupees. On the amount of 5 lakh rupees, I will suffer 2% TDS. Few exceptions were given, like payment to government, bank, etc., business correspondent, with which I think more or less we are not concerned. Right? Effective date was already this was already in place right from 1st September 2019. In fact, 194N came by way of a Finance Act 2019. It was already in place from 1st September 2019. But now, why I am taking is because this section has been completely replaced now, and we have got a new section in place with effect from 1st July 2020. So the 19 amendment has brought this section from 1st September 19, and 20 amendment has now substituted this section 194N. What is the effect of this substitution? Let us understand. So in sum and substance, the effect of the substitution is this. There's in the case of a recipient, now they are saying that those recipient who are not filing return, they are withdrawing money of more than 1 crore. At the same time, there are people who are still not filing return of income. So therefore, they want to make these provisions more tighter, more stricter in terms of compliance. And therefore, they are saying that if a person has not filed the returns of income for all the 3 assessment years, for which the time limit under 139(1) is expired before the previous year, in such a situation, they are saying that instead of 1 crore being the threshold limit, we will bring down the threshold to 20 lakh. So we will have a lesser threshold, and deduction will be made at 2%, of course. And they say that, okay, 20 lakh will be the threshold, but if you keep on withdrawing even more than 1 crore, then beyond 1 crore, the deduction will be at 5% and not 2%. So normally, if I am a person who has not filed my 3 returns of income for the last 3 years, those returns for which the time limit under 139(1) is expired at the end of before the previous year. So if we are talking from 1st July 2020, let us understand that 31st March 2020, if the time limit for filing my return under 139(1) has expired on 31st of March 2020, therefore the returns which we are looking at are assessment year 1920, 1819 and 1718. If I have not filed these 3 returns of income, and I have withdrawn more than 20 lakh rupees, so instead of 1 crore, straight away my threshold will come down to 20 lakh rupees, and beyond 20 lakh rupees, I will be suffering deduction at the rate of 2%. And I am a person who still keeps on withdrawing, and I cross 1 crore, then it will be at a rate of 5%. The rate of tax will go up, the TDS will go up to 5% from 2% if the threshold of 1 crore is closed. The original threshold, if you cross 1 crore, then again it will go back to 5%. That is the sum and substance of this amendment. Now, the issues which are coming. First and foremost issue is, as we understand, this is what they are talking about is TDS on withdrawal from bank account, my bank account. Now, TDS, as we understand, is a tax on income. So first and foremost, fundamental question comes up, whether there is any income in this entire transaction. If I am withdrawing something from my bank account, can you say that it is having a nature of income? That is the first and foremost question. I might have received a gift from somebody. Of course, in our situation, in our country, we know that many of the gifts are bogus, and there are many other ways in which the bank balance can be jacked up by a person. I am not on that. There are sufficient provisions in the Income Tax Act to take care of those. Section 68 is there, which is now very harsh provision. In fact, the person can suffer the tax at the rate of almost 84%, somewhere in that range, at least 78%, even if he discloses. We are not onto that. My question is that the TDS being a tax on income, is there any income element at the time of withdrawal of money from bank account? The answer is absolutely no. There might be some element at the stage of when I deposit some money in my bank account, but not at the stage of withdrawal. It is certainly my tax paid money. I might withdraw. I might be a genuine person who might have suffered TDS under some other provisions of the Act also. Maybe under 194J. As a professional, if my professional fees are very huge, which actually is not, but in any case, if it is, right, I might suffer some TDS under 194J. That money is lying in my bank account, and for whatever purpose, now I am withdrawing that 1 crore and I am using it for whatever my personal purpose. That is my business. I might spend it on a wedding in a family, or I must just go to Mahalakshmi race course with that. That is my lookout. Right? My question is there any income color of that money? Is the money which I am withdrawing bearing the color of income? The answer is a big and categorical no, and therefore it is no business for the government to levy TDS on such provisions, such withdrawal from bank. Though the purpose is, of course, to address some areas where people are withdrawing cash in huge, depositing cash in huge. That part we are not doubting, but there is better mechanism to address that situation. Having said that, on income there is no on withdrawal there is nothing like a income. This particular case, in fact, this is a 2020 decision has come up, where a central cooperative bank, this Tirunelveli District Central Cooperative Bank, has challenged the constitutional validity of this 194N before the Madras High Court. In that situation, in that facts of the case was such that this bank was having the accounts of so many people who were agriculturists and who have their money in the account. And there were some further cooperative banks also who were having account in this cooperative bank. and they were withdrawing money, and the income was not in that having the taxability. There was no taxability of the income. In such a situation, while they challenge 194N, the Madras High Court has of course not struck down constitutional validity of 194N, but they said that if the sum received by the assessee is not income, if at all the sum received by the assessee is not income in his case, then section 194N will not apply. So to that extent, some limited benefit has been given by the Madras High Court in saying so. So therefore, this of course is the only decision as of today of a High Court dealing with 194N. So therefore has some value. And if at all we are able to convince our banker that look here, this is not having the color of income, then yes, certainly we can avoid the provisions of 194N. How much it will be practically possible is for one to try and understand. But of course, it is possible relying on this particular decision. Though it is Madras High Court, it is equally binding in our Bombay also, because it is the only decision of any High Court as of today, and no contrary decisions are available. So therefore, I would feel it is possible in a given situation one can try. Then also let us understand that Section 199 impact. Section 199 of the Act provides that the TDS credit will be available in the year in which the income is offered to tax. That is a clear-cut mechanism under Section 199, which provides that TDS credit will be available to me in the year in which I offer particular income to tax. Now, in this situation, 194N, the earlier example which we have taken, I have already suffered under 194J, and therefore this income is not going to be offered again by me. In the financial year 1819 or 1920, I have suffered 194J, and thereby my bank balance have been accumulated to 2 crore, of which I withdraw 1 crore. Now, whether in such a situation, you can say that this income will be offered in which year, and therefore in which year I will get the credit of this 194N TDS. The answer seems to be that it is very difficult for me to claim credit, technically speaking, because already the income is not offered in any of the years subsequent, because income was already offered earlier. I will not be able to travel in the earlier years and claim credit because in that year deduction was not there. If I travel in the future years, I will not be permitted. So this issue remains. Some better administration would have been required. Some better way of handling this matter would have been required. So one more fundamental question which remains unanswered, unfortunately. Let us talk about some return filing. This, the amendment, the reduction in threshold. So, what if one of the returns not filed, and 2 years, one of the years return is filed, but 2 years are not filed? I would feel yes, in such a situation, the proviso will not apply, and therefore the original provisions will apply, because the proviso applies in a case where there is a complete 3 years return missed out by the person. Otherwise, even if you file just 1 of the years return, then probably you will be not having any difficulty in that. What if the returns are filed beyond the due date? So they are saying that you have to look at those returns for which due date under 139(1) is gone. But it is possible that my return for 1819 I might have filed, though filed beyond 139(1). In such a situation also, the language of the section, I feel that it will be possible for one to avoid that lower threshold and higher rate of taxes. Return not filed since income is below threshold. Even then, unfortunately, even if your income is below threshold, you have not filed the return, even then probably the provision will apply, right? The purpose is very simple. They want to take those people within their net, those people who have not filed the return. And especially this case where the income is below taxable limit, those people will be even in fact, having a larger claim to prove that in such a situation how he has withdrawn more than 1 crore. So yes, in such a situation it will apply. Newly incorporated entities, of course, doesn't apply, because those 3 years were not there at all. So because I am incorporated in today's financial year only, therefore I cannot file my return. So certainly it will not be applicable. Right, after 3 years is over for that entity, then this provision will be applicable. Of course, there is extra burden, etc., on banks, but with which I think more or less they have tried to find out some way in which it can be handled. I think there is some mechanism which is already in place, and I think on the website of the income tax department also there is some information which is available now. So probably that's not something which is too much for us to debate upon. That brings us to the 194O. More or less, I think we have discussed this 194O when we discussed finance bill. So therefore, I would try to be a little faster, right? 194O is basically TDS by e-commerce operators. We have discussed last time. So say, for example, for the purpose of our discussion, let us frame an example that one of our client, ABC and company, is selling, say, mobile phones through Amazon or Flipkart or anything. And in this example, Amazon becomes the e-commerce operator, and our client is an e-commerce participant. Now, in such a situation, we are told that there will be 1% TDS to be deducted by Amazon from our client ABC and company. And if the PAN is not furnished, then it will be 5%. So all those transactions which are done on an e-commerce portal will be suffering 194O deductions. Right? The biggest part of the worry is this, payment made by a purchaser of goods or services directly to the participant. I might be, displaying my product through Amazon. There are many small time businessmen who are now displaying their product through Amazon or Flipkart or anything. But then actually the delivery are made by the person himself, the businessman himself. He delivers the goods to the place of the ultimate consumer. In such a situation, also the consumer makes the payment to the ABC and company, in our example, by cash at the time of delivery, right? But we are told under 194O that whatever payment the consumer makes directly to the e-commerce participant will also be deemed to be the payment which the operator has made to the participant, and therefore that will also suffer the TDS. They will have to maintain proper record of it. Of course, it is not that difficult with the way of MIS which this all these e-commerce operators are having. It is not difficult, but unfortunately this remains. So the COD transactions also will suffer the TDS. Finance Act has also made amendments so as to clarify. Earlier there was one situation that because of the definition of e-commerce operator which was there was some confusion, because the definition was saying that he shall be responsible for paying to e-commerce participant, and therefore the earlier bullet which we have seen, that direct payment made by the consumer, was getting out of it, and therefore one would have taken a view that I am not an e-commerce operator at all, going by your definition. So now that anomaly has been sorted out. They are saying that even due to the even if the person is making the payment directly, the requirement as to the payment to be made to the e-commerce participant has been removed, and also they have inserted one more subsection to clarify that for the purpose of this section, e-commerce operator shall be deemed to be the person for paying to e-commerce participants. Threshold, of course, is just a small amount of 5 lakh rupees, and that too only if it is a payment made to the individual or HUF and the person furnishes PAN or Aadhaar number. If the e-commerce participant is anything other than individual or HUF, so say for example firm, LLP, company, etc., in such a situation there is no threshold absolutely, and it will be applicable right from 0 rupees. Right? The applicability, of course, has been deferred from earlier 1st April to 1st October. And TDS is applicable only on the amounts post 1st October 2020, of course. Transaction in respect of which TDS is deducted under 194O, if at all, once the e-commerce operator deducts TDS on the payment under 194O, then on the same payment there will not be any further deduction under any of the other sections. That is what we are told. But again, at the same time, e-commerce participant will continue to make the payment of TDS from e-commerce operators' income. Say, for example, if at all they are using some of the technological platform, technological services of the, so ABC and company, say for example, is using the technological services of Amazon under this, and then making payment of some fees for that. If it is a connected item, then there will be no TDS. But if it is this type of unconnected item, they are using some technological fees for technology service, or if they are using some godown of Amazon, if at all, or any other web operator, right? Then in such a situation, he will have to deduct TDS. So there will be two-way TDS, of course. And if the e-commerce operator is a non-resident, now we have got equalization levy also in place. So that will also apply as per the rules of the equalization levy. Now this circular number 17, which we are talking about on 29th of September, has issued clarification vis-a-vis 206C as well as vis-a-vis 194O. So what is the circular talking about 194O? Some of the things have been clarified, and let us look at those. It says that just on a similar way, the securities, etc., through recognized stock exchange will not be covered, and therefore BSE will not be, though it is an e-commerce participant per se, BSE will not be required to deduct TDS from anyone, right? And therefore it will be out of the purview of 194O also. That is what we are told. Similarly, power exchange, transaction on power exchange also is out, and no TDS, right? Payment gateway not liable. This is important, which has come up. Payment gateway not liable to deduct TDS under 194O on a transaction where e-commerce operator has already deducted the TDS. Say for example, what it is. My client ABC and company is selling the goods through Amazon. At the same time, my client, when the person makes the payment, the consumer makes the payment to my client through any payment gateway, say Paytm in our example. if Paytm is making payment in respect of a sale which has been made on the Amazon platform, then Amazon will deduct TDS from ABC and company under 194O. But Paytm is also rendering some services. In fact, Paytm is doing some services of collection of money on behalf of the customer. Now, this 194O is applicable vis-a-vis goods as well as services. 206C applies, 206C, which we have discussed in detail, applies only vis-a-vis goods, but 194O applies for goods as well as services. And therefore, as far as 194O is concerned, a view is, but for this clarification, a view would have been possible that when the Amazon deducts TDS on the goods, and the Paytm also, whatever amount which is he is making payment to the ultimately ABC and company, on that also he will deduct TDS because he is giving some service. In such context, it is said that once e-commerce operator has deducted the TDS, then in such a situation the payment gateways will not be required to collect TDS further. So the payment gateways are out. Of course, they say that they may obtain, the Paytm in our example will obtain undertaking from e-commerce operator that yes, you have deducted. So what it is? Now Paytm will go and take declaration from undertaking from Amazon that you have deducted TDS of ABC and company, and therefore because relying on this undertaking I am not deducting. Now again, whether it is feasible, to what extent it is possible by Paytm etc. is a matter of a great debate. I am really not happy with the wording which has been put up in this, that he'll have to obtain some undertaking etc. Of course, the circular says may obtain. Now whether this may should be read as shall etc. I would feel even if the undertaking is not obtained, the sum and substance of the circular is that there should not be double TDS, and therefore I think that should be having some sense there, right? Even if the undertaking is not obtained. Insurance agent or aggregator will not be liable to deduct TDS. This is also coming out of the circular, that insurance agent or TDS aggregator will not be liable to deduct TDS for subsequent years. So, if I am doing some business through policybazaar.com, and if I am, I go for policy from policybazaar.com, Policybazaar in turn gives that business to whatever insurance company, right? Now, in such a situation, the common assumption is that the insurance company, the services are rendered by Policybazaar in the year one only, though my insurance may be for 20 years. So therefore, in the subsequent period, there is no services which are given by this Policybazaar, and therefore I will be directly making payment to the respective, say HDFC Ergo, for example. Now, in such a situation, they are saying that since there are no services in the subsequent years, therefore no TDS to be made on the subsequent years. But they have probably missed out one thing, that there might be a situation where I might be making the payment on a month-to-month basis. In fact, they should have said that only the first premium will bear the brunt of this, and not all subsequent payments. They have gone on the next financial year. It could have been next 6 months also. I might be having the monthly payment of insurance, etc. That has not been addressed. But I think again, if it is brought to the notice, probably it will be the circular will be further modified. But as of today, this is the concession which has been given. Of course, issues, I think more or less we have discussed these issues at that time also. Goods return is the biggest. COD we have already discussed. How TDS will be deducted, I think it will be on the same way. Though the money is directly received by the participant in this example, he will have to refund that money to the operator, and thereafter operator will operator will independently, of course, deposit that money and give a TDS certificate. What about goods return? Goods return should have been given some concession, but there is not there. Aggregator, there are many aggregators, Ola, Uber, etc., but still they will be they will be required to make this TDS deduction from the participants. And 5 lakh is not something which is a big amount, will be crossed very easily. Part payment to operator and part payment to participant is again a challenge. If my money is lying in Amazon Money, if I am making a payment, say for example, as a consumer, I am buying a mobile from Amazon, already I am having some money in Amazon Pay, and that money is, say, about 5,000 rupees are lying. I will be using that 5,000, and for the balance amount, I'm making a cash payment, or I'm making a credit card payment. In such a situation, how the person will keep track of all these things is again a challenge. Of course, they will have to maintain all these records, which is not actually very difficult, but unnecessary. I would feel unnecessary things are being imposed upon the associates. Non-resident will also be required to deduct TDS, even if the this operator is a non-resident. Even then, he will have to require TDS. There is no country-specific restriction. So even if he is based in any country, once he's doing any business through any e-commerce of any e-commerce participant in India, he will have to undergo this TDS, file returns, deduct TDS, etc., so on and so forth, right? There was one expectation that this will be removed, but unfortunately, during the course of the enactment of the Finance Act also, nothing has been changed, and therefore we'll have to live with that, right? In fact, Section 204 is now amended to say that a person himself can do that, or there can be an authorized person or agent, etc. So if those non-residents may appoint somebody as their agent and do it, right? The gross amount of sales, whether GST to be included. We have got the circular in respect of so many other sections, but that doesn't cover 194O, and therefore, unless and until CBDT comes out with a circular, the GST portion will also suffer the TDS as of today. 194M, etc. I think I would skip, because you may probably refer to that, and the slides are self-explanatory, and I'm going to share this presentation with all of you, and you can have a look at it at your convenience. Nothing much to debate and discuss on this, because we are already at around 6:12, and I think we need to cover up the question answer also. 194, 195 also some small amendments. Primarily this is in connection with TDS on dividend, because now dividend is back to be taxed in the hands of the shareholders. So nothing much to debate, no more issues as such. 194A also something, a small amendment. 194C also nothing much, right? So these are all small things, and the slides are self-explanatory. I think we'll not spend time on that. A few small amendments which are relevant. I would just again, this I think we have discussed at the stage of bill also, but let me again warn all of you that now there is a delinking of TDS amounts with reference to 44AB. Earlier, all the things were linked to the person getting audit under section 44AB, etc. Now, since the amount of turnover under 44AB are multifold, 1 crore and 5 crore in different situations, right? Now we are told that as far as though a person may be able to avoid tax audit, individual and HF may be able to avoid tax audit under 44AB because his threshold has gone to 5 crore, he will still be required to deduct TDS under various sections of the Income Tax Act, because the TDS sections are now talking specific about amount of 1 crore. Earlier, all the sections were referring to section 44AB, but now the sections are independently and on their own. They are talking about 1 crore being the threshold. Therefore, please understand that there might be a situation where the person may be not required to undergo audit, but still he will be required to follow the TDS provisions. Reduction in TDS and TCS rates, we are aware the section of this RCP Act has already taken care of it. Now, earlier there was a press release, so there was a worry whether, press release will be sufficient for this TDS TCS reduction. But now this Amendment Act which has passed, the RCP Act, has taken care of it, and it has been specifically provided in section 197B and section 206 subsection 10A of this RCP Act, and therefore no worries on that front, right? Lower deduction of certificate because of this COVID was extended, that whatever was your certificate given in the lower deduction certificate for the financial year 1920 will be valid till 30th of September. So this was given as a concession, but now 30th September has also gone. So if at all, if you want to have a lower deduction or nil deduction for the current year, you need to renew now, because that concession has expired on 30th of September. And contrary to the expectations, contrary to the rumors which were there at the stage of this RACP bill had come, right? There was a feeling that there are extension of TDS returns, etc. for Q4 of last year to 31st March. Please understand that was a completely wrong interpretation of the provision. The provisions were not read by the people who started, talking about extension. Please understand that the date has already expired and there is no extension on filing of those Q4 returns of financial year 1920. With that, I think we have covered everything, whatever I wanted to discuss with all of you. And I would request, I'm really very much thankful to the Churchgate Study Circle for giving me this wonderful opportunity to talk to all of you today evening. And of course, my apologies for crossing the time a bit, and apologies for the technological problem also which we had in the beginning. With that, I think we can head to the question answer session. And if whatever questions are there, I would, with your permission, do I stop sharing the screen? Yes. With that, I think we can take up the questions, if at all there are from any of the participants. There are a few things in the chat box and one in the question answer box. If some of the panel members are already analyzed, then I think you can ask.
Yeah, they have analyzed. Yeah, please. Allah Jigar, we cannot hear you.
Yeah, can you hear me?
Yes, we can hear you. Please, Parag, go ahead.
Yeah. Is LRS applicable on gift given to son or daughter in USA?
Yes, it is applicable. It is everything under LRS is basically, as I said, is a personal payment, and though it is not having any nature of income, it may not be having any income in the hands of the son or daughter, but yes, it will be subject to collection of TCS. Unfortunately, the person will ultimately claim it as a refund. In fact, that brings me to one more point. If some of our relative are held back at some of the foreign destination because of this COVID situation, and he's suffering medical emergencies there, and you are remitting even for medical emergencies, even that will be having impact of LRS. Yes, please.
Then, if we book a foreign air ticket through Make My Trip or any other site, is TCS applicable?
If we make a foreign air trip through Make My Trip, probably on the air trip it will not be, because it is Make My Trip is not a
They are
authorized dealer.
also tour
It's not an
operators.
authorized dealer. It is not an authorized dealer. It may be under the overseas tour program package. Yes, it might be, because the definition of overseas tour program package includes the cost of travel also. So yes,
If it is
probably
only
yes.
ticket, then also it will be applicable.
Yeah, because it is including the cost of travel also.
Then TCS to be collected on the basic value or total invoice value, including GST.
I think I have covered that in my already.
It has to be including GST. Right?
Yeah, because technically speaking, circular says including of GST. Legally, I would feel GST is not part of turnover, but because to avoid all these difficulties in calculation, etc., you may take a practical view and collect on a receipt basis.
But for those who are collecting through invoice, then they have to
Yes.
levy it, including GST, in the invoice also. Because normally they do it on the
No,
basic value, I think.
no, only on the basic value. Only on the basic value. If at all you are collecting on the invoice, first of all, I am not comfortable with that idea. But anyway, that's a separate story. But if at all you are collecting as a part of invoice, only on the basic value, not including GST.
And if you are doing it on collection, then including GST.
Then it will go as a, because it will be very difficult for you to
To
maintain that
segment.
type of records actually. So practical view says that better to have all this avoid all these complications. Of course, circular also says so. So one more support for you actually.
I think is covered. Yeah, that's all, sir.
Yeah, thank you so much. It was very, very wonderful. It was really very nice for Dilip Bhai to invite me and talk to all of you. Chartered Study Circle, of course, we are all missing the physical
Yes.
meetings which we used to have in that wonderful St. Xavier's auditorium. But having said that, all the friends of Chartered Study Circles are very close friends, and therefore Dilip Bhai in particular has been always kind, and has been always talking to me, even even whether there is a meeting or not. Even otherwise, we are sharing some good exchange of messages, etc. So thank you, Dilip Bhai, for everything, and it was a pleasure for me to talk to all of you this evening. Thank you.
Thank you very much, and really very nice analysis of the provisions. And I
Thank you.
request Manish to propose a well-deserved out of vote of thanks.
Good evening, friends. I, on behalf of the Churchgate City Study Circle, first of all, wishing you all of you happy Diwali and very prosperous New Year. Uh, uh, I welcome CA Ketan Vajania ji on behalf of the Churchgate City Study Circle, and thankful to him to spare his valuable time and give his presentation on provisions of TCS and TDS. It was a wonderful session, and he has explained the provisions of TCS and TDS in very nicely and practical manner. And I hope that all the members' doubts have been cleared, and they will be in a better position to understand the provisions uh, and support their and give their services to the clients. With this, I propose a hearty vote of thanks to Mr. Ketan Vajania ji.
Thank you. Thank you. Thank
And
you all of you. It was a pleasure.
with this, friends, we have a we have lined up another seminar on auditing. Probably the announcement will be done in due course. Till that, goodbye, good night, good evening.
Okay, thank you. Thank you very much.
Thank you, Dilip bhai. Take care.
Okay, bye. Bye.
Bye. Bye.
Thank you.